In this lecture, I'm going to share with you my full SMC trading strategy from start to finish. As you know, there is a lot of confusion and incorrect information in this trading space. This makes it extremely hard to stick to one individual strategy, resulting in strategy hopping and preventing you from seeing consistent profitability. The proven strategy I'm about to share with you is simple, fully mechanical, fully rules-based, and takes all of the guesswork out of trading. I want you to help yourself by watching this video until the end and make sure to give it your full attention. The SMC strategy I'm going to share with you step by step has allowed me to get funded over $1 million in less than 90 days. This simple, rules-based mechanical system makes me on average $35,550 per month. This proven system has allowed hundreds and hundreds of my students not only get funded, but to become consistently profitable traders. For those of you that are new here, my name's Liam and I'm a mathematics and finance graduate from Newcastle University, and I've been trading, investing and coaching in the financial markets for the last 8 years. With that being said, let's dive into this lecture. Okay, so this is a one time frame strategy. My executions, my analysis, everything's going to be on the 15-minute time frame. So on the left-hand side of my screen, I have TradingView, and the right-hand side of my screen, I have the exact trade plan that I want you to follow step by step. So the first thing to talk about in the trading plan is the risk and the management of our trades. So I want you to ensure that you're risking 1 or 2% of capital per trade. And I want you to ensure that when we enter a trade, when we are tagged or triggered into a trade, we adopt a set and forget style system. So there's no micromanaging, there's no going break even, and there's no interfering. What we have is our points of interest. So these are the levels that we're looking at taking trades from. So what we have is the Asia session high and low. This is from 7 p.m. until 12 a.m. midnight Eastern, that's EST. And we have the London session high and low. This is between 3 a.m. and 5 a.m. Eastern. So what we're going to do is we're going to plot these on the charts, and this is what we're going to use to identify our points of interest in the markets. It's very important and it's absolutely crucial to note that our trade executions, which literally just means when we're entering into the market, this is going to be during the London session between 3:15 a.m. up until 4:59 a.m. Eastern. And this is during the New York session between 8:15 a.m. up until 10:29 a.m. Eastern. So let's start things off keeping it very, very basic. The first thing that we need to do when we turn up to the market is to understand what is our overall bias. And we can do that in a very mechanical, rules-based approach by simply using the 50, 100, and 200 exponential moving average. So if you head over to the indicators tab at the top of your screen, and if you type in EMA 20, 50, 100, and 200, it's this one right here by Dr. Sweets. So I want you to click this indicator, add it to your charts, and add it to your favorites. I want to make it very clear that I'm not affiliated with any of these indicators as well. And as you can see, we have the 50 EMA in green, the 100 EMA in blue, and the 200 EMA in red. And so if the 50 EMA is greater than the 100, which is greater than the 200, this indicates to us as a trader that we have a long daily directional bias. And so we would only be looking for long positions in this market. So therefore, we can head over to our trading plan. We can check this off. We've identified that we have a bullish market regime. And so we have now an overall bias in the market. You can see the second rule in the system is if we have a bullish market regime, we need to mark on the previous session's low. And we know that this is your point of interest. So what we know according to the rules-based system is we have the Asia session high and low. So this is between 7 p.m. and 12 a.m. Eastern. And we have the London high and low. This is between 3 a.m. and 5 a.m. Eastern. So what you can see right here is we're turning up to the New York session, right? We know that we can execute during the New York kill zone. This is between 8:15 a.m. up until 10:29 a.m. Eastern. And because we're bullish, we need to mark on the previous session's low. So we're not really too interested in the previous session's high. We're more interested in the previous session's low. So I'm going to go ahead and mark on the London low right here. And we also have the Asia session low as well. This is another point of interest. So this is your Asia low right here. So we can then go ahead and check this off, right? Because we're bullish in the market. We've identified the previous session's low. Then what we're doing is we're waiting patiently for a session-based manipulation below a previous session's low. So because we're bullish, we need to see a form of manipulation below a previous session's low. What this is going to be doing is it's going to be stopping out any early buyers, right? So think about it. If you were long in the London session, your stop loss is going to be resting below the London session low. And so this manipulation is going to be stopping you out. So what this does is it forces buyers to then sell at current market prices. Because in order to get out of a buy position, you need to sell at current market price. What this is also going to be doing though is it's going to be inducing traders short into this market, thinking that this is a breakout to the downside. And so this is further going to flood the market with more sell orders. So that's really what a session-based manipulation is doing. It's doing two things: stopping out early buyers and inducing traders short, getting them on the wrong side of the market. It's these orders and it's this manipulation that provides the liquidity and fuel for the bigger players to actually move the market in the intended direction. So we're still waiting for our session-based manipulation, and this is exactly what we get right here. So if I just zoom in right here, what you can see is prices came below the London session low, manipulating below this level. And so we can go ahead, head over to the trade plan, and we can check off our session-based manipulation. Then you can see the next thing on the trade plan is to wait patiently for a 15-minute bullish confirmation. This has to occur during a kill zone, and we can enter on the break of this 15-minute bullish candle high. So it's important to note we're not entering on the closure of the candle. We're entering as price breaks the candle high. We can see we've had the manipulation lower. We've got our 15-minute bullish confirmation right here. This is indicated by this candle right here. And this is really just telling you that buyers are actually stepping into the market, right? Unless we wait for a 15-minute bullish confirmation, how do we know if buyers are even stepping or even are present in the market? Because unless you wait for a confirmation, well, this manipulation could easily just continue to the downside. So this ensures that you're entering into the market when buyers are actually showing their hand. And so what I'm going to do, I'm going to mark on the confirmation high. So this is your confirmation high right here. And we have the manipulation low. So in this example, the manipulation low is also the confirmation low. And so according to the plan, we can enter on the break of this candle high. And I like to enter via a buy stop in the market. And this ensures that you're staying very mechanical. Because if you're trying to use market executions, if you're late to the market or you blink for a second, all of a sudden prices broke the high and it's all the way up here. So what I recommend to do is once you've seen the candle closure, is you set a buy stop just above the candle high. And this ensures that when price does start pushing to the upside, you're going to be tagged in. So just so we can keep everything very mechanical, what I'm going to do is place a buy stop 0.3 above the candle high. So this ensures that you're accounting for some spread in the market, and it ensures that you're not tagged into the trade incorrectly. So we can go ahead and check this off. We've had our 15-minute bullish confirmation. This is during a kill zone. In fact, this is at 8:30 a.m. Eastern, and we've set our buy stop above the candle high, so on the break of the candle high. So the final step is a stop loss below the manipulation low, and we're going to be targeting a mechanical 1 to 2 risk to reward. So I'm going to drag the stop loss down right here. Again, I like to account for spreads. So this is a very handy tool right here. You can see down to the low is around 6.3. So what I'm going to do is make this 6.6 just to account for some spread in the market. And what we're looking for is targeting a mechanical 1 to 2. So we're not looking for a home run in the market. We're not looking at taking huge amounts of pieces out of the market. We're just looking at taking a small, repeatable, bite-sized piece out of the market over and over again. So as you can see, we were tagged long in this trade right here. And then it's a case of setting and forgetting this trade. So there's no micromanaging. There's no going break even. There's no real room for interfering. And it's really important that, of course, you're using correct risk management, whether that's 1%, 2%, whatever you want to be risking, but make sure that it's uniform and make sure that it is consistent. So we can go ahead and check off the last thing on the checklist. And then it's a case of just allowing this trade to play out, being very, very patient. And as you can see, during the New York kill zone, this trade did hit take profit for a 1 to 2 risk to reward. I mean, it's not as simple as it looks, right? Because during the NYSE Open, the New York Stock Exchange Open, we got a pretty significant drawdown to the downside. Really what we got was an excursion of around 80% towards our stop loss. So really what's happened is you've gone from a 1-to-1 risk to reward or thereabouts, and then all of a sudden you're in, you're 90% towards the stop loss. So a lot of traders who are emotional, who are over leveraging, over risking, a lot of these traders would have closed this trade right here. And it's only the traders who have the discipline to hold these trades, who don't get emotional, who don't micromanage, who actually see the profits on this trade right here. And for those of you that are thinking that I'm cherry picking this trade, which to be honest is a fair assumption, here is the analysis that was sent ahead of time to the exclusive community. And here was the exact execution of this trade, which was also shared with all of my students. This was also a trade that allowed me to acquire another $200,000 in prop firm capital. Okay, so now let's look at another trade example. Okay, so we're looking at the US 500 on the 15-minute time frame, and we're starting to enter into a New York kill zone. The first thing, of course, to note is what is our daily directional bias? What is our overall bias on the 15-minute time frame? Again, you can see, right, we have the 50 EMA, which is greater than the 100, which is greater than the 200 EMA. And so this indicates to us that we have a bullish daily directional bias. And so that means that we are only looking for long positions. So we can go ahead and check this off. We understand our overall bias. And so the next rule is, okay, we're bullish in the market. We then need to go ahead and mark on the previous session's low. Okay, so what I'm going to do is mark on the previous session's low. So this is the London low. And so we can go ahead and check this off, right? So we understand we now have our point of interest, which is the London session low. We're looking for a manipulation below the London low. And then we could think about potentially taking a long position in this market. So as you can see, step number 3 is wait patiently for a session-based manipulation. So at this moment, nothing really too much is going on. We're still, a pretty significant distance away from the London low. And so we need to remain very, very patient. And then what you can see happens is within 30 minutes, we get a pretty aggressive liquidation, a pretty aggressive sell-off in the market, which is what manipulates the London session low. So we've identified our point of interest. We've seen a manipulation below the point of interest. So we can go ahead and check this off as well. Next, we need to wait for our confirmation. So we're waiting for a 15-minute bullish confirmation. Of course, this has to occur during a New York kill zone. We have this right here, right? So we have to be tagged in between 8:15 a.m. up until 10:29 a.m. Eastern. And we know that we need to enter on the break of the 15-minute bullish candle high. So if I just zoom in right here, this is your confirmation high right here. This is your confirmation low, which happens to be also the low of the manipulation. And so this candle, so this is the 10 a.m. Eastern candle, this closed at 10:15 a.m. Eastern. So what that means to us is we have 14 minutes to be tagged long in this trade. And if it doesn't tag us long, well, what we're going to do is just cancel the buy stop in the market. So my buy stop went above this 15-minute bullish candle high. And as we know, right, invalidation goes below the manipulation. And in terms of spread, so on the US 500, you can see down to the low is 8.8 points. So what I like to do is add 0.5 to this, okay? So we're going to make this 9.3. And we're going to be looking at targeting, again, a mechanical 1 to 2. So again, everything has been met on the trading plan. We have a bullish 15-minute market regime. We have seen a manipulation below the London session low. We've waited patiently for our 15-minute bullish confirmation. And we've got a buy stop set above the 15-minute bullish candle high with clear invalidation below the manipulation. And we're looking at targeting a mechanical 1 to 2. So everything has lined up here. All of the rules are met. If that is the case, you take the trade without hesitation and you're ensuring that you're risking, say, 1 or 2% of your capital. And so I was tagged long in this trade right here. And then, as we know, according to the system, we need to set and forget the trade. So there's no micromanaging, no going break even, just allow it to play out. So if we play this out right here, you can see we got a pretty significant push into profit right here. We've just started sort of consolidating sideways. And as you can see, take profit was hit for a 1 to 2 risk to reward. And this was also a trade that I took literally yesterday. So this is Monday, 6th of October. And this was executed at 10:15 a.m. Eastern. Again, for anybody thinking that I'm cherry picking these trades, here is the analysis that was sent ahead of time to the exclusive community. And here is the exact execution of this trade right here. So this right here is my exact step-by-step SMC trading system that allows me to make, on average, $35,550 per month using a system that takes all of the guesswork out of trading. There's no room for any discretion. There's no room for guessing in the market. And what you end up finding is you start to become very calm in the market because you have your trading plan, you have your rules, you know what you want to see. And then when the rules present, you execute without hesitation. So one of the most common things that a lot of my students tell me is like, you know, Liam, like I'm now very calm in the markets. I used to trade based on maybe discretion or my emotions or how I was feeling. And now I've adopted this kind of mechanical, this kind of systematic approach. And all of a sudden, everything just seems so calm. I know what I want to see. I trade without hesitation. I trade my plan, I define my risk, I set and forget my trades. So I don't want you to just like take my word for it or take all of my students' word for it. I want you to go away and I want you to backtest this system for yourself. And it's one of those things, like once you start seeing this pattern, it's something that you cannot unsee in the markets. But like the most important thing is like, well, if you don't have like a rules-based mechanical trading system, then how do you even know if you actually have an edge in the market to begin with? Without a system, without a process, without a systematic approach, you're literally just guessing in the market. And you know, yes, you may get funded. Well, a lot of that is down to luck. A lot of that is literally just down to gambling in the market. And so if you would like to learn more and you would like to see me trade this live every single day in the markets, with my exact game plans, trade plans, executions, and you would like to learn the exact blueprint to this fully mechanical, rules-based trading system, where I hold your hand every step of the way, then make sure to check out my exclusive community or my one-on-one mentorship. The link is in the description down below. I also encourage you to join my free Discord community. I often go live and I share my game plans, trade plans, and executions. And you can also reach out to myself directly. So as always, thank you so much for your time and support, and you take care. Bye-bye.